Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. We have our experts today, Kunal Bothra as well as Vivek Karwa, who will be taking your queries. Remember, viewers, you can write to us on the WhatsApp number, and when you write to us, please mention your name, the stock that you're looking to invest in, mention that name as well. If you've already invested in the stock, mention the buy price, the quantity and the time horizon if possible, because in that way we'll be able to guide your queries better to our experts. And talking about experts, like I said, we have Kunal Bothra on the technicals, Vivek Karwa on the fundamentals, and let's kickstart with the query. And the first one is coming your way, Kunal, from Mika, who's writing to us from UAE. She's saying she's a regular viewer of the show. And Praj Industries is a counter, short-term targets, and will there be a further upside? She's bought 100 shares at an average price of 542 rupees per share.
I think it's a very good stock to hold on to. The stock has done reasonably well and it's up almost 50% and more in terms of your cost price. So I think from 500 to now, 500 approximately to now 730, the stock has done pretty well for itself. So I think it's a good stock where you should continue to hold on. The best part about the stock for Praj in terms of the charts is that the stock has come out of a major consolidation. So after a 10-year of major consolidation from 2008 to 2018-19, where the stock managed to break out, and then even the last few months, the stock had shown a couple of months of strong price performance, then a correction over the next couple of months, and then a continuation up move. So the trend is very strong for Praj and indicates that this could be a major multi-year rally for the stock. And sugar sector overall is getting into a revival phase as such. And Praj is one of the best performers, so it makes sense to stick to this name even from a long-term play.
All right, moving on, and Vivek, the next query that I have is coming from Ranjit from Gurgaon, and he wants your advice on Raymond. He's holding 200 shares at a price of 2,700 rupees. What to do with this particular name? He can stay invested for the next 1 to 2 years.
Good morning. Raymond, in fact, on your sister channel, I had given recommendation as a buy at approximately 1900, 1950 levels with a target of 2500. So it has just surpassed that. What I feel is if you're longer term over here, you should definitely hold it on. They are going to split the company into real estate business and textiles. And the focus of the government on textile also is there. More and more PLI schemes would be coming, and the real estate business overall in the country is right now doing very good after almost 10 years gap. So valuation wise also at around 11, 12 PE, Raymond looks quite good. So though the stock has run up, yes, you may not jump in and buy immediately, but as and when you get chances, because market is also at all-time high. So even small dips, I think you should keep accumulating the stock. So it looks good for long term.
Moving on, then, this one is from Partha, who's a senior citizen from Kolkata. This one is for you, Vivek. He wants to know whether between JSW Steel or JSW Energy, which one is a better buy, and he wants to know an entry price with a long-term horizon because he wants to focus or rather play these counters on green hydrogen themes. So keeping that in mind, is it a JSW Steel or a JSW Energy that he should look at investing?
See, what I feel is if you really want to play on this green hydrogen, you should be in stocks like NTPC and not into JSW Energy, first thing. Second thing, in between JSW Steel and Energy, I feel that Energy looks better. Valuation-wise, it's definitely not cheap, and you cannot expect cheap stocks at this levels of market. But yeah, longer term, if you're looking at JSW Energy, looks a bit better placed because of the focus of the government again on the energy sector as such. Steel, the problem is it is a cyclical commodity sector, and hence as and when steel prices go up or go down globally, these stocks also suffer. So that's the reason.
Right, moving on to the next one, in Kunal, this query is from Sandhya Bothra, and she's writing to us from UAE. She wants your advice in short-term targets for 2 counters. Data Patterns, her buy price is 3,087 rupees, and she also has Endurance Tech from a price of close to 2,800 rupees. What to do in both of these names?
I think both of them are very good charts. In fact, Data Patterns is something which over the last 2 or 3 days had come into my radar. When the stock had come into a breakout, I think it was an inverted head and shoulder pattern for the stock, and the volumes were also pretty much on the higher side 2 or 3 days back. So it's a very attractive chart. I would suggest to hold on to the stock. And when you look at this over the medium-term time frame, 3, 6 months, 7 months kind of a charts, for Data Patterns, the stock has shown a lot of consistency of price uptrend. Every now and then, the stock gets into a rally, pause, and then a breakout of the previous highs and starts off a new trend for itself. So it's a classical sign, and you would want to stick on to these names for as much as possible till the time the trend lasts for these names. So same is the case with Endurance. Again, a fantastic chart over the last 4 or 5 months. The stock has shown excellent move. I think almost a 50% jump in the last 4 months for Endurance, from 17,1800 to now 2,700 plus mark where it's trading right now. So both of them are very strong charts, would suggest a hold.
All right, this one is from Shivanshu, who's writing to us from Delhi, though he's mentioned a couple of names when it comes to the defense pack, Kunal. One of the stocks that he is invested in is BHEL at 285 till July 22nd only. I'm not sure whether he is invested at 285, I believe, yeah. 285 maybe his buy price till July 22nd. What's your view? And the reason I believe he's mentioning the date of July 22nd because there are a lot of speculations that the union budget could be on that day. We have no confirmation on the date of the union budget, but what's your take for the very near term, just ahead of budget? Where will BHEL be?
See, I think it's a fantastic chart when I look at this, because look at it this way: the stock was almost at 60-65 a couple of years back, moved towards 200 to 50 mark, and then now crossed the 300 hurdle as well. Yes, the last 2-3 months the stock has been a lot more volatile and choppy, but these kind of volatile nature and choppiness for stocks are actually considered to be very good, because then the weaker hands are generally dished out of the stock, and you see the stock getting into a second round of breakout as well as a start of a fresh uptrend. So that's what I would probably believe, and could happen for BHEL going forward. Would be bullish on the stock and would advise to hold on to the stock, not just from a 22nd July perspective, but potentially if you want to encash on the bigger and the larger uptrend, I think you should stay put for many years.
All right, the next query that I have, Vivek, is coming in from Rebecca. She's holding 50 shares of NIIT from a price of 135 rupees. She can continue holding it for the medium term. What to do in this one? Stay invested or maybe look out for better opportunities?
Better opportunities. What is going to happen is, if you buy this stock, it is just going to continue testing your patience. And at some point of time, you'll feel that market has gone up, but my stock is still stuck in same range. So as such, IT services still is not doing good, though there was some recovery in recent past. But will they really continue this recovery? I really have doubts. So switching out is better.
This one is coming from Puneet Saxena from Ghaziabad. He has Allied Blenders, which just got listed this week. Vivek, I'll take this query to you, though he wants to have only 1 month time horizon view on this one. 106 shares at a price of 281. That's the IPO price. He wants to know whether he should stay put with this one or look to exit. He's already made that listing pop per se when you talk about Allied Blenders. But Vivek, what's your take? Does it make sense to only stay put with this for 1 month, or should continue to hold on for a bit longer?
See, in this space, the brands really matter. And what I feel is United Spirits, United Breweries, and Radico have better brands than Allied Blenders. So the space is really good. It is going to grow like anything in the future. The consumption of alcohol in India, if you look at per GDP capita, consumption is on the lower side across the world. That is India, it is the lowest. So hold liquor space, but you can shift out. You can probably buy United Spirits.
All right, so that's the view coming in on the alco beverage space. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, more stock queries to take, so don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries there. And the next query that I have is coming in from Nikhil Sharma. And Vivek, he wants your advice on Century Textile. This stock too has seen a phenomenal run-up, wherein Nikhil is holding the stock from a price of close to 2,400 rupees. Though he's not at profits right now, but what's your advice in this one? Can he continue holding it for the long term?
All the stocks are moving because of their real estate play, which the land bank they hold. And most of these companies are planning to develop these land banks by demerging the business into a separate entity. Now, but in case of Century Textiles, I think the run-up has been already very, very steep, and most of the juice has already been taken out. The valuations also of the textile business is not that cheap right now. So what I would suggest is staying in companies like Raymond or Bombay Dyeing, which still look quite good, is a better strategy than staying in Century Textiles. So market can take it up, that is different thing. But if you look at safety and the valuation wise, I think Raymond is much more better play than Century.
All right, this next question is coming from Padma Siva Rao from Bangalore, and she wants to know about Jindal Polyfilms, 24 shares at a price of 696 rupees per share. Kunal, she wants to know what's the short-term target that you have for Jindal Polyfilms. Should she look to book profits now?
Well, short-term wise, you may look to book profits because I think for the first time the stock is showing signs of exhaustion, and there is also an RSI divergence which is coming back into the play for Jindal Poly. So that could probably mean that maybe the stock could retest the levels of 700. So I think booking profits over here and then looking to buy back sub the 700 mark or just around that 700 level could actually turn out to be a good strategy.
All right, Vivek, the next query is from Pradeep. He is a long-term investor and is already holding 50 shares of Sunflag Iron from a price of 205 rupees. And he also has Andhra Petro, 100 shares from a price of 97 rupees. Vivek, what's your outlook in both of these? He is making some profits in both of these names. Good time to book out profits, or can he continue to hold on?
See, Sunflag, I think you can book profits, particularly because in steel segment, it is looking a bit pricey. But when you look at Andhra Petro, I feel you should hold it on. First thing, the company as such is doing good. Secondly, it has some very good subsidiaries which are also listed in the markets. So it is not fully played out. I think the stock should do well over a period of time.
All right, this one is coming in from Chaitanya, who's writing to us from Hyderabad. And Kunal, I'll just read his query as the way he's written. He's holding about 1,800 shares of Bank Nifty call options at 53,300. He's saying buy option at the level of 330 and the stop loss of 200. Should he hold or book loss?
I think the stop loss of 200 could be a something which you I think should adhere to. I think if I'm not wrong, the option is now placed at 240 to 45 as per the charts and the softwares which I use. So maybe I think if the bank Nifty gets into a recovery, you might see the option coming back towards say 280 300 mark. But that could be a best intraday recovery which one can expect, because so far today what's actually happening is that many of the private sector banking names, the likes of HDFC Bank, etc., have started to show signs of some price correction. So it could be profit booking, but from an intraday view specifically, I would believe sticking to a stop loss of 200 and on the upside say closer to 300 could be a good range for you to exit.
All right then, and Kunal, the next query is coming from Naman Deora, and he wants your advice on two counters. Firstly, Tejas Networks, holding it from a price of 1,445 rupees, and he also has Zydus Life, 50 shares from a price of 1,115 rupees. He actually bought both of these names for trading purpose, and he can continue holding it for the next 1 month. But would you advise for the same?
See, Tejas Network could be a tricky because a stock, right now, because just looking at the short-term charts, if you look at the last, say, 2 weeks of price patterns at 1475 approximately, the stock is facing a lot of resistance. So there have been, candlesticks with, very deep upper shadows where it indicates that the stock is facing a lot of resistance and there's selling which generally emerges into the stock at higher levels. And I think that's one of the reasons why I would probably believe that for the next 2-3 weeks, the stock may likely consolidate unless there is an event or a catalyst which takes the stock past about the 1475 mark. So I think that could be a tricky one. So I would probably believe that maybe have some sort of a stop loss at play for this trade in case if the stock is unable to break past about the 1475 mark. But Zydus is something which is interesting. The stock, in fact, today is given a breakout. So if possible, you may look to add some more capital over here, because potentially the stock looks attractive for at least a 5 to 7% upside over the very short term.
All right, let's take this one from Sanil, who's writing to us from Bangalore, and this one's for you, Vivek. He wants to know what's the outlook coming in for Indiabulls Housing Finance, which now has finally gotten approval for a name change. He wants to know about this one because he bought the stock at 210 rupees, considering its low price to book value. But now, after the rights issue, which he subscribed, also, the stock is now stagnant at around 160 to 170 rupees per share. So, what's your outlook coming in for Indiabulls Housing Finance? What should he do for Indiabulls Housing Finance? Stay put with this one?
Okay, Shiril, in fact, one of my client messages that you're looking too serious on the channel today. I'm not serious. So let me try to crack a joke. India was housing finance after changing name to Samman Capital. Maybe it gets some Samman in the market. So I feel you should hold it on. Valuations look quite good. They have seen rating upgrades in near future. That also has happened. And the way company is doing, and whenever I speak to agents who deal in housing finance business, they are saying that India housing finance is coming back. So at these levels, I think you should hold it on. Maybe 20 could be buy levels. I mean, sell levels when it goes up. And as a disclosure, it might be there in many of my clients' portfolios.
All right, that's a hold coming in on India World Housing Finance. But moving on, and Vivek, once again coming to you. This query is from Rani from Saudi Arabia, and she's saying that she's holding some PSU stocks like PNB, Canara Bank, as well as SBI in her portfolio for the last 6 months. So at this point, would you advise to stay invested for the medium term, like just after the earnings start kick in, or would you advise to average out at this point in time or completely exit?
I don't think question of averaging out comes here, because most probably she'll be in profits, because the stocks have really done well over the last few years. Now, 6 months time horizon could be a tough task to comment on. But what I feel is some of the PSU banks have run up really too much, way beyond fundamentals. Example, say Indian Overseas Bank. I don't know why is that bank trading at those kind of levels, firstly. But the names which you have mentioned, particularly Punjab National Bank, Canara Bank, and SBI, I think these three banks are quite comfortably placed even now. You can hold it for longer term. And as banking space recovers, my favorite sector is banking space. So this also should do well.
All right, coming to you, Kunal, then this one's coming from Indu, and she wants to know about 2 mid-cap IT companies that she can accumulate for a positional trade. What's your take coming in on this, Kunal? Any counters that she can accumulate for positional trade?
See, I think L&T Infotech, Mindtree as well as Coforge are the two ones which are looking attractive on the charts. That's where we find that there's been some stability of price uptrend, and I think if I'm not wrong, Coforge has actually managed to give a breakout above the 200-day moving average today, or I think yesterday. So I think in that sense also, the stock looks a bit more attractive compared to many of its other peers. So I would probably suggest both of these names.
All right then, moving on, and Kunal, one more query for you. This one is coming from Kathir, and he's holding Amara Raja, and his buy price is just 600 rupees a piece. He's holding 200 shares. What to do in this one? Can he hold it for the longer? He's 40 years old now, and what he's saying that he wants to gift these shares to his grandchildren maybe. So I'm not sure whether this longer period you can predict for Amara Raja, but on the charts, how is this stock looking?
Well, I would suggest that that's a good option. You may consider doing that for from a very long-term play, because the stock seemingly has given a 10-year breakout. So I think after 2012 or 13, the stock for the first time has managed to break past above its major hurdles of 1,000+ levels. Now the only question is that you would also want to protect maybe some part of your capital in case if there is any kind of a volatility which may creep into the stock price time and again. So since you have a certain quantum of shares, I would, and since you bought at levels of I think 600 approximately, the stock is almost 3x from your cost price. Maybe trying to take out your capital could actually be a good strategy. So even if you sell say 1/3, for example, of your quantity which you're holding, I think you would probably have taken the capital out. So now you can let the profits run and then pass it on to the next generation. That will be a good strategy.
All right, so that's the take coming in for Amara Raja. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, more stocks to discuss, or rather more queries to take, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries. And looks like, Kunal, that budget or the waiting for budget, I think people have got impatient with it. Given the fact that now you'll have the full budget, everyone wants to know what sort of a strategy should they use. A lot of our viewers have asked us about defense stocks, where they're making profit. Does it make sense to go ahead and book profits ahead of the budget? Another one I have from Leena, who's writing to us from Mumbai. HOEC 190 is the buy price. JSW Infra 300 is the buy price. Now she wants to know whether she should go ahead and book profits out of them before the budget.
So I think that's a very I would say very beginner way of looking at thought processes when you're trying to protect your profits on the back of just because an event. If a stock of the pedigree of the defense names, for example, if they've managed to survive as well as thrive corrections historically, I think budget could be just one-off play for these names. Now, what comes out of the budget is very difficult to anticipate, but I would probably believe that you always have to try and ride the trend devoid of the volatility if you're a medium to long-term investor. Unless you're a short-term investor and you want to book out your profits and stay away from the volatility, then it's a different ballgame altogether. Coming to the names which you mentioned, Hindustan Oil Exploration, etc. I think the charts look attractive for both of these names. I would probably believe that these stocks are at the cusp of a fresh breakout. HOAC, for example, I think is at 210 to 11 mark for itself, and the stock recently has given a high of 216 to 17 mark. So which means eventually the stock would probably try and break past about this 217, 220 hurdle and start off a fresh uptrend for itself, which is a hold.
All right, the next query that I have, Vivek, is coming in from Ravi, and he wants your advice on Cochin Shipyard. Short query, can he buy at current market price? What's your advice?
On dips, okay, Shrishti, because see, again, as Kunal said, many people are just targeting budget and then thinking that shall they invest. I have a contra opinion. Possibly after budget, there might be some sort of profit booking because the major event would have already passed through. And the market knows that there is going to be focus on defense, infra overall. So that's already factored into the prices.
Right, with that, let's kickstart with the rapid fire then. And Kunal, coming your way, TP Vinod wants to know about ITC future. He's waiting to buy it. What's the right time to enter and the target?
I think above 435 could be a good buy in terms of futures for a potential target of 445 to 450. Stop loss at 425.
All right, Vivek, any advice on Hudco as well as Indiabulls Real Estate to go ahead and buy at current market price? This query is from Gautam.
Both are good to buy.
All right, ISAF Small Finance Bank, that's the counter. Rima wants to know about it. 68 rupees is the buy price. Can she hold or average it out? Vivek?
I would avoid.
All right, Kunal, Smita Vikram is holding HCL Tech from a price of 1486 rupees. Continue to hold on or book profits?
Continue to hold on.
Kunal, Vignesh has TCI Express at the rate of about 1000 rupees per share. Should he hold or exit?
Continue to hold on.
All right, Vivek, what's your advice on Solar Industries? Krish is holding 25 shares. Buy price is 9,105. Wants a long-term view on this one?
Long-term hold on dips buy. So it's great play for infra.
All right, Ujjivan Small Finance Bank, Sunny wants to know on the technicals, can he buy right now for the short term, Kunal?
Not really. Avoid the stock. It's still showing signs of downtrend.
All right, Kunal, the next query is from Bhaskar, holding 650 shares of Bank of India, buy price 124 rupees. What's your suggestion here?
Keep a stop loss. Maybe I think closer to 114 as a closing stop loss for the day could be a good stop loss.
All right, this was coming from Kaval, who's writing to us from Dubai. He wants to know about SH Kelkar, 300 shares at a price of 163 rupees per share. Stay put with this or look to exit. What's your take, Vivek?
I think you can avoid the stock.
All right, Vivek, what's your view on Credit Access Grameen? Pawan from Gurgaon wants to know, good buy at current market price?
See, I am avoiding most of this small finance and Grameen finance kind of companies. So be with big banks.
All right, and with that we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Vivek, for joining us on the show, decoding what exactly is happening with Wockhardt, as well as taking all the stock-related queries. And with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.
If you like this video, then like, share and subscribe to ET Now.